You need to know the principles of accounting. You need to know how bookkeeping is done. You need to understand entries. You need to be able to identify the gaps. Isn't it? Adinte endengil example parayu. Anybody? We will take simple examples. Okay, assume a sales has happened. Okay, a sales has happened. 1 lakh rupees is the sale consideration. The sale had happened 1 year back. It's been 1 year and the money hasn't come to the company. Is that a fraud?
Yes.
I hope you understood my question. Let's say you are running a shop where you are selling, say, mobile phones, and you sold an iPhone 1 year back, and till now the money hasn't come to the company. Is that a fraud?
Yes.
How did you conclude it is a fraud? When money hasn't come in, you start questioning why the money hasn't come in, isn't it? You start doubting. Now, it could happen that the customer had paid the money and it didn't reach the company, it didn't reach your bank, or it could so happen that the customer was given time to pay and he has not paid it. Isn't it? It is possible. It is possible that it is still receivable and the customer has agreed to pay after 1 year with interest. So how do we find out whether there is a fraud involved or not? So first of all, you have to use your accounting knowledge. What is your accounting knowledge over here? In case of sale of goods, actually there must be a receivable. Normally, in terms of like in an entity like a shop, let's say a mobile store, normally we follow a cash and carry model, isn't it? You pay the money and you take the goods. That's what is normally done, isn't it?
Yes.
In other levels of trading, maybe wholesale trading or a distribution business, or if you are a manufacturer, probably you give credit. So that is where the concept of credit sale comes in, isn't it? Simple, I'm just saying simple accounting so that you are able to understand what the concept is. So you have concepts of credit sale. What is credit sale? You give time for the purchaser to pay the money. Simple.
Yes.
I hope it's not anything complicated to you. So that is possible. But in terms of retail trade, you have your basic knowledge that in retail trading, it is normally a cash and carry model. Sales happen over the counter and cash is collected over the counter before the goods are parted with. Am I right?
Yes.
You're able to understand that? So here this has not happened. The phone, something like a phone, there are goods which are known as FMCG. What is FMCG? Fast moving consumer goods. I hope you know what FMCGs are. So today, unlike the days when mobile phones had just come into the market, today FMCG is a fast moving consumer goods. It doesn't have too much of shelf life. It has to be sold, isn't it? The inventory has to move for various reasons, isn't it? Because in mobile phones, new models keep coming every 6 months. The technology keeps changing. So whatever is manufactured, whatever is there in the shop has to be sold at the earliest. That is the nature of FMCG, fast moving consumer goods. So you know for sure, because of your accounting and auditing knowledge, that sales has happened, money should have come in. But here money hasn't come in and it's been 1 year. For goods such as phones or any FMCG for that matter, 1 year credit period is not acceptable. So that raises a red flag, isn't it? So you start doubting, is there a problem here? And then when you go through the books of accounts, not one, there are many such transactions. And then you start your inquiry. You find out who was responsible for these sales, what was the situation in which these goods were sold at credit, was it indeed sold on credit or was it for cash? You make enquiries within the organization with all the people who were there during that time when these sales happened. Usually shops today these days have got CCTV visuals. So you say,